Time to move on then. And Ajay briefly mentioned all economy stocks. So it's time for an exclusive conversation with the management of Shree Cement. It was a bit of an operational, weakish set of numbers in comparison to what the street was working with for Q4. Mild miss on the EBITDA numbers. The volumes were in line. How are things shaping up? Well, we're joined by Mr. Neeraj Akhoury, the MD of Shree Cement. Good morning, Mr. Akhoury, and good to have you on CNBC-TV18. Well, you have been, holding various posts across the cement space for the last, 10, 20 years or so. So it's good to hear your thoughts, particularly today on Shree Cement. Let's get straight to the point then. Last year, Shree Cement did volumes of close to around 31.8 million tons approximately. For this year, what kind of a growth are you talking about in terms of a growth number? And EBITDA per ton, yes, it's recovered. Maybe the street wanted more, but you're holding it around 1,000 rupees. Give and take price changes, input cost changes. What is the band we should be working with?
So good morning, Nigel, and thank you for inviting me. As far as volumes are concerned, Nigel, I think we are very clear in Shree that we have to grow to a rate of capacity utilization which is at par with the industry average. This year we are also expecting some capacity additions in East as well as in North. Given that, I believe we should be growing in the range of 12 to 13%, where our market growth outlook is about 7 to 8%, slightly ahead of the market growth, but largely because of new capacity additions that will come. With this growth, we should reach somewhere around 35 to 36 million ton this year. On EBITDA, I think we all know that there is a trend of softening of the fuel prices. That's a bit of a tailwind that we are experiencing. And therefore, if everything remains stable, including the realizations, I believe directionally we will be in a positive zone on EBITDA versus last year.
When you say positive zone, Mr. Akhoury, can you give us some sense? You are at 1,011 now, Nigel tells us. You had earlier said that, maybe climbing up to 1,200 is also possible in FY24. Do you retain that view? Maybe some sort of a numerical guidance that will help.
It's difficult to give a very numerical guidance at this point. I mean, you know that fuel prices are volatile. But as I said, with the kind of reductions that we are seeing, we should see directionally positive with prices remaining stable. But to give a number at this stage, I think it will be little too early.
Okay, so since you will not be able to share numbers on EBITDA, let's talk about overall demand. How has Q1 played out? You're talking about, of course, adding capacity and volumes will be higher for you. What is the demand picture like? What is the sort of the pricing mood like in the market? What have we seen in the first quarter?
So on the demand, I believe India is cement demand growth rate is very, very stable, more towards the high end of the single-digit numbers, 8 to 9%. We expect this demand momentum to continue, given the fact that the kind of infrastructure projects that we are doing, but also in housing and commercial space. So that we are quite positive on demand growth, both for last year at about 8-9%, but also for this year, which should be somewhere around the same numbers.
Okay, Mr. Akhoury, good morning. Could you tell us what are the, from a slightly longer term perspective, say next 3 to 5 years, what are the changes possible in the company? There has been a great focus on increasing the share of sort of premium cement. I think that number now stands at about 7.5% of the total. So industry is watching very keenly about what can be done. So could you want to highlight a few things?
Yeah, so we have started off early this year. We commissioned a new marketing function, which is totally different than the sales function, as well as technical services functions. We are also now working on the brand equity with some of the leading players in the world, trying to understand how can Shree bring products and product offerings with much sharper value propositions and therefore pricing ability. We were at about 6.5% to 7.5% kind of a range on premium products. We expect to double it up very soon. When I say very soon, this year. But as we progress, there will be more focus on increasing the share of premium products to higher levels. But beyond that, what I think when I look at 3 to 5 years of Shree, I do see a company which is developing itself into a very modern company. And when I say modern, in terms of digital tools, in terms of IT platforms, in terms of world-class performance on ESG. We are very proud to say that we are the greenest cement company, most probably in the world now, with 55% share on green energy. But we want to further take it up with better performance on AFR and other topics. Yeah. With
Mr. Akhoury, got it. Sorry to interrupt. We've always compressed our time, so apologies for the interruption. You said you will double up the proportion of premium sales, so it'll go up to 13-14% this year. This year, and medium term beyond that, what are targets like, and what will this do to your overall margins? I mean,
so it should add about 40 to 50 rupees on the overall margins. The way we look at it, yeah, at 15%, it will add.
All right, Mr. Akhoury, let's spice things up a little bit then. You know, when I asked Mr. Bangur, what about inorganic strategy, he said, let Neeraj join and then we'll take shape. Now, there are various reports that are indicating, in the last 1 month or so, that Shree Cement is interested in Sanghi Industries. Now, could you offer a comment on that? First, I wanted to understand, what is your view on inorganic growth? I'll tell you what, I've been tracking the sector on the whole, and obviously you have been with various other counterparts as well. But Shree Cement, with this inorganic growth, they haven't been very aggressive. They go, they check it out, they, apply sometimes, but they're never very aggressive. According to you, inorganic growth, at what level will it be, attractive? Anyway, putting on capacity more than $100 per ton. So at what price point will it be attractive?
So, any time we go for inorganic growth, and we have seen a lot of this in the past, it has to, it has to be within the domain of what I call the strategic fit, but also it has to add value to our current operations. As and when such opportunities come, we are not against inorganic growth. We will certainly evaluate it. We are keen to look at some of the opportunities which will come up in the market. But at the same time, we are very focused that such a step, such an acquisition, should add value to our company, but at the same time should also be part of the strategic growth fit that we have. And that's how much I will comment. I will not go to specifics about any target at this moment. It's too early. But if it meets our criteria, surely we are not against inorganic.
Okay, Mr. Akhoury, let me ask you again. Since you're talking about value proposition, there is an asset out there that reportedly is on the block. That is Sanghi Industries. It's a 6 million ton unit. You're getting it, at current reckoning, it's less than $70 per ton. Is Shree Cement interested?
No, but as I said, we are interested in many opportunities. It's not only one specific one, but it must meet our expectation in terms of value addition as well as strategic fit.
I missed that, Mr. Akhoury. Are you saying Sanghi did not meet, or you're saying if it meets, then it will be on your radar?
As I said, ma'am, these are all under evaluation. There are many proposals under evaluation.
So you're interested?
Fair for me to comment on any specific one at this stage. What I would say that whenever evaluation happens and we find it is right for us to acquire, we will.
Okay. So should we expect an inorganic move in FY24? I'm not going to name companies or entities. And also, I think you have a longer-term target of 80 million tons, right? So in that target, how much can come in from inorganic? How much will be organic? And, when do you hope to achieve it?
80 million ton is a pure organic target. We have several places where we plan to expand our footprint. So 80 million ton will come from purely organic growth that we have planned and we are putting into execution now.
All right. Mr. Akhoury, just one final question. If you're looking at inorganic growth, till what level will it be attractive? I'm not talking about a specific asset, but at what level? And I'm asking you this because Mr. Bangur told me, Nigel, Neeraj will take a call on all this. So that's why you're in the hot seat. I have to ask you.
Nigel, you must ask, but I did say, there is nothing, it's all relative. So it depends which asset, the quality of assets, the quality of market, the quality of logistics, the quality of their brands. All that together creates a number that is the right number for that target. Yeah. So it's very difficult to give one number for any
Okay, Mr. Akhoury, sorry, just to clarify that premium sales share going up will add, you said 50 rupees to your EBITDA per ton, right? Just to clarify.
Yes. 50 rupees per ton will add.
And you said the plan is to raise this even higher. To what number by when, if you can?
So we are targeting about 30% to reach by 2025, 25-26 fiscal. And we could do even better if some of our plans are successful.
Will you define premium as what, sir? I mean, what do these premium bags retail at as compared to non-premium?
Typically, all those products which are placed at price band top of the market.
Okay. Okay. All right.
Got that. Mr. Akhoury, we'll leave it there. Thank you very much, sir. Appreciate you joining in and good luck. And we hope this is the first of many interactions with you. Thank you indeed, Shree Simmons there with that perspective. We'll take a very